The trade war between the United States and China has just taken a sharp and dangerous turn. And this time, it's hitting where it hurts the most: the wallets of everyday people. But here's the twist. China isn't just responding, it's launching its own economic strikes. And one of the most surprising fronts? TikTok. Across TikTok, viral videos are now showing just how massive the price gap is between what things cost to make and what Americans are paying for them. Like the luxury Birkin bag, sold for nearly $40,000, but only costs around $1,400 to make in a Chinese factory. The message? Cut out the middleman and buy direct. But this is more than just online noise. China has canceled major orders from Boeing, one of America's biggest manufacturers. At the same time, they've tightened exports of rare earth elements, materials crucial for making smartphones, batteries, and military tech. The result? Big pressure on American industry and a growing supply chain nightmare. President Xi Jinping isn't slowing down either. He's building stronger trade partnerships with countries like Vietnam, expanding trade routes, and backing globalization. This stands in direct contrast to America's rising protectionist stance, especially under Trump's economic playbook. That playbook includes heavy tariffs, some as high as 25% on steel, aluminum, and imported cars. These weren't just aimed at China, but even close allies like Canada and Germany. One argument given for these tariffs was to stop illegal fentanyl from entering through Canada. But data shows less than 1% of it comes from there. The everyday consequences are piling up fast. Gas prices are climbing. Food is becoming more expensive. Financial markets are on edge. And it's not just numbers. Real families are feeling it. Blue-collar workers, pensioners, and small business owners are all taking the hit. Canada, long considered America's closest partner, has had enough. Foreign Minister Melanie Joly publicly stated that the relationship between the two nations may never return to normal. Prime Minister Mark Carney stood firm, saying Canada won't be bullied, and urging Americans to pressure their own leaders. In response to US tariffs, Canada imposed their own, and what once seemed like a solid partnership is now being tested at every level, from trade to diplomacy. Meanwhile, American companies are struggling to adjust. Shipping containers worth billions are stuck at ports in Shanghai and Shenzhen, unable to move, clogging up the global system. With supply chains strained, US companies are trying to shift operations to Southeast Asia. But places like Vietnam and Indonesia can't keep up. They're already maxed out. Logistics costs are soaring. What looked like a smart backup plan is now becoming a logistical disaster. And Chinese manufacturers, instead of backing down, are refusing to cut prices. They're holding firm. In the end, American consumers. Stock markets are reacting hard. Within 2 days of a tariff hike, $5 trillion disappeared from US markets. The S&P dropped over 600 points, the Dow nearly 4,000. Millions watched their savings, investments, and retirement accounts shrink. Trump's tariffs were meant to strengthen the US economy, but now they're pushing allies away. Canada is renegotiating trade deals with China. European nations are seeking new partners in Asia and South America. Longtime friends are going their own way. China, and even the EU, are promoting other currencies. The euro, the Chinese yuan, and even digital currencies are rising. Countries are trying to move away from the US dollar, which is weakening fast. And here's where it gets more dangerous. China and Japan together hold over $2.1 trillion in US Treasury bonds. That's nearly 1/5 of total US debt. If either country decides to sell off even a portion, interest rates in America would skyrocket. Borrowing would become more expensive, and inflation would explode. Homes, cars, credit cards, student loans, everything would cost more. Businesses would slow down. Job creation would stall. And still, the biggest threat isn't even the sell-off itself, it's the fear of it. That fear could shake global markets fast. But China and Japan are not in a rush to press that button, because it would hurt them too. A financial meltdown helps no one. Still, if they sell even some, the panic alone could set off a global economic storm. And China's been planning. They've cut their US debt holdings quietly for over 17 months. At the same time, they've been buying gold. Over 300 tons since 2022, building reserves that now total more than 2,200 tons. Gold can't be frozen, and it doesn't lose value the way currency does. This move suggests that China is getting ready for a world without the US dollar at the center. And it's not just preparation. It's a challenge to the global system America once dominated. On top of that, China's rise in the tech space is shaking Silicon Valley. Despite US sanctions, China has doubled its semiconductor market share, going from 15% to 30%. They've started making 7-nanometer chips, and even advanced flash memory tech that rivals top American companies. In 2024, China cut semiconductor imports from the US by nearly half, forcing American tech giants to scramble. The strategy is clear: self-sufficiency and leadership, not dependence. And then there's food. In March 2025, China canceled over 1.8 million tons of soybean contracts from the US, a blow worth $22 billion. Missouri farmers alone could lose over $1.1 billion. Brazil has now stepped in, becoming China's go-to supplier. American farmers, processors, and export workers are left behind. Meanwhile, food prices at home are rising. The Department of Agriculture predicts a 6.4% jump this year. That's an extra $47 a month for average families. The US dollar, once king, is under fire. Global investors are looking elsewhere. And as long as tariffs keep rising, inflation, unemployment, and mistrust in Washington will only grow. Trump's economic promises may have sounded strong, but the reality is hitting home hard. Allies are drifting, enemies are striking, and Americans are left with higher prices, fewer jobs, and a storm that's far from over.